Academy. Dream it, learn it, live it, that's where you want to be.
Hello, all right, so this is a continuation from our previous class when we did posting from journal entries. We're posting to our ledgers, we're making our ledgers. Now, once everything is done, has been posted, your ledger will look like this. For example, this is our bank account, it will look something like this. So now the next step is to balance off the ledger. So balancing of the ledger usually happens at the end of the month, or at the end of the financial period, which is usually 1 year. That's when usually we do this balancing off, because we want to know how much is in our bank account. Because if the information is like this, we don't know how much is in our bank account. So we need to know at the end of the month or at the end of the year, how much money are we left with in our bank account. So for that reason, we have to balance off our ledgers. So you can see we have amounts that have been recorded on the debit side of our bank account. These are just, simply telling us this is the money that was coming into the account. So the first money came on January 1st, which was capital, probably introduced by the owner. Then we made some sales, I think through bank, and that money came into our bank account. So on the debit side in our bank account, it's just telling us the money that came into our bank. Then on the credit side, it's just showing us the money that was actually leaving our bank. So now we need to compare our debit side and our credit side and see how much money are we left with. So the first step that we do, we calculate how much do we have on the debit side. So if we say 50,000 plus 30,000, that will give us 80,000. Okay, then we go to the credit side. You can see we only have 20,000. So whichever side is higher between the debit side and the credit side, that becomes the total of the account. So in this case, the total of this account is what? 80,000, because our debit side is more. So that is going to be the total of this account. So to show the total amount, we put double lines below that amount. One line on top, double lines below, like this. So both sides, it has to be the same amount of 80,000. That is the total of this account. Now, after we've calculated the total, the next step is to see by how much our credit side is short. Because we said the total is 80, but if we only have 20,000 on that credit side. So by how much is our credit side short? So 80,000 minus 20. If there were 4 or 5 transactions, 80,000 minus everything that we have on this side. So in this case, you are going to get how much? 60,000. 60,000. So this 60,000 now, we call it balance CD. Balance carried down. So balance CD, right here, balance CD. That is this 60,000. And since I said we are doing this at the end of the month, or at the end of the financial period, so let's just say end of the month. So meaning to say the date we are doing this, that is the date that this balance CD is going to be. So you can see transactions are for January. So this one is going to be 31st of January. Our balance CD, we have the last working day, the last date of that particular month. The last date of that month. That's why we put January 1st, because we are doing this at the end of the month. Hence the date for balance CD, January 31. All right. So now what it is simply telling us is that in our account we received 80,000. In our bank account, 80,000 came in and we used only 20,000. So this balance CD is showing us the amount that is left in our bank. So in our bank, we have only 60,000, meaning to say the following month, which is February, we are going to start that month with how much? 60,000 in our bank account. So this, right, is on the opposite side. Now we are now writing the date of the first date of the following month, which is February. So first of Feb, balance, we are now calling it balance CD, balance BD, balance brought down. The amount is same, 60,000, like this. Okay, I'll repeat again. This account, what is it is showing us, during the month we received two payments into our bank account. The first one was capital, 50,000. The second one was sales, 30,000. And the total of that is 80,000. From that 80,000, we used only 20,000 to buy a motor vehicle, meaning to say the balance is 60,000. So at the end of January, the money that is left in our bank account is 60,000. This is the same amount that we are going to take over, or that we are going to start the month of February with. So balance CD becomes our balance brought down. The balance that we've brought down from the month of January to the month of February is 60,000. So that's how we balance off our our ledger accounts. The first thing, make sure you are comparing all the amounts on your debit side and the amounts on your credit side. Whichever the amount is more, the amount that is higher becomes the total of the account. Then you have to subtract all the amounts that are on the shorter side to get your balance CD. That balance CD is simply telling you that is what you are left with in that account, and that is what you are going to take over, or that take with you to the next month. And so the balance CD on the opposite side becomes balance BD. The amount remains the same. So basically, that's how we balance off ledgers.